Hello, my friends in banking industry. I am CA Tanajirao Jadhav. I am a practicing chartered accountant for the last more than 30 years. I practice in accounting, auditing, and financial consultancy matters. Today, I wish to discuss Reserve Bank circular regarding prudential norms or treatment of bad and doubtful debts reserved by cooperative banks. I am presenting my views and comments, and also I invite your comments and suggestions for this discussion. As you are aware, as per the Reserve Bank of India, the circular number RBI 2024-2025, serial number 58, August 2024. The banks are required to pass rectificatory entries in order to comply with the accounting standard 5. The Reserve Bank states that as per the cooperative laws or prudential norms, the cooperative banks have created bad and doubtful debt reserve in their accounts. However, there is no uniformity in creation of such reserves. Certain amount is debited to profit loss account or charged to profit loss account and credited to bad and doubtful debts reserve, while certain amounts are appropriated from net profit to the provision for NP or bad and doubtful debts reserve. This practice is not in consonance with the accounting standard 5. The accounting standard 5, para 5 says all items of income and expenses which are recognized in the period should be included in the determination of net profit or loss for the period unless an accounting standard requires or permits otherwise. Thus, the provision for NPA for bad and doubtful debts is an expense and must be charged to profit and loss account and shall not be created out of profit and loss appropriation account. As a one-time measure and in order to rectify the previous entries, the Reserve Bank of India has issued this circular dated 2 August 2024. I will discuss what this circular says. The circular says that banks should identify and quantify the certain amounts which are credited to bad and doubtful debts reserve or say provision for NPA through profit and loss appropriation account, and this identified and quantified amount shall be named or treated as BDDR 2024. Then the circular says to the extent of this BDDR 2024, the equal amount shall be charged to profit and loss account but below the line and credited to the bad and doubtful debts reserve on liability side of the balance sheet. Now, here the word below the line is very important. So far as cooperative banks are concerned, as per section 56, read with section 29, these cooperative banks are required to present their financial statements in the format prescribed by section 56 ZA. That was prevalent for so many years. In this format, there is no profit and loss appropriation section. So, if we follow the format, then this adjustment of below the line will be recorded in the profit and loss account itself, but that will not be correct. Let me clear this position that the Reserve Bank of India issued a press release on January on 7th January and issued a draft for format of financial statements of cooperative banks. The comments were invited, and thereafter, on 20th March, this draft was incorporated as updated in ori- original master circular issued in 30th on 30th August 21. The same is updated thereafter. So, as of now, as per this Reserve Bank of India's circular dated 20th March 2025, the cooperative banks have to prepare their profit loss account, balance sheet, or say the financial statements in the format prescribed under third schedule. And now this the format in section 56 ZL will not be used for the year ending 31st March 2025. So as per the circular, the charge of this bad and doubtful debts reserve or BDDR 2024 shall be from profit and loss appropriation account only. Certain banks or certain accountants or banking experts have suggested to create a or open a account titled BDDR 2024 and pass one entry from profit loss, one entry to this account from presently available bad and doubtful debt reserve appearing in the liability side, and then pass debit to profit and loss account and credit to profit and loss appropriation account, or like that. But considering the circular dated 20th March 2025, the cooperative now banks have to now prepare profit and loss appropriation account below the profit and loss account itself. Now the Reserve Bank of India says the amounts transported BDDR through appropriation accounts, but in certain banks, a larger portion is also written off from the bad and doubtful debts reserve. But this write-off of bad and doubtful debts is not considered in this circular. It is likely that after this write-off, the balancing BDDR which are created out of appropriation account may not be available for further treatment. Secondly, where there are provisions are available and also the BDDR 2024 equivalent amount is available, then against which this write-off should be offsetted is the declaration. Considering the Prudential policy, the amounts transferred to BDDR through professional appropriation account are nothing but a form of reserve which is a post-tax transfer. So all these write-offs, in my opinion, should be offsetted against these amounts which are transferred from profit and loss appropriation account, and the balance amount shall be offsetted from the net NPA provisions in bad and doubtful debts reserve. But the circular is silent in this regard. So better it is to identify and quantify BDDR 2024 and pass the entry to charging profit loss account and appropriation for profit and loss appropriation account. That will serve the accounting treatment as envisaged in this circular. Another point should be considered. In many cases, certain banks have transferred certain other reserves to bad and doubtful debts reserve. Now, if these reserves are also out of profit loss appropriation account or post-tax reserves, then in my opinion, these amounts must be taken into BDDR 2024 for further accounting treatment as per this Reserve Bank of India circular for prudential treatment of bad and doubtful debt reserve. So the correct position of provisions from profit and loss account are charged to profit loss account, and from profit and loss appropriation account will be accounted. By this method, if the profit and loss account is presented in the new format along with profit and loss appropriation account, then to the amount extent to the extent of amount in BDDR 2024 will be reflected in profit and loss appropriation account, and to that extent the net profit above that profit and loss appropriation account will be reduced. So the published profit will be reduced to that extent as per my opinion. Then this after this appropriation, the profit available will be transferred to the balance sheet. Now, here question arises whether this appropriation reversal entry is available for distribution of profit or dividend. That should be seriously considered. Secondly, we have to consider the tax implications for such accounting treatments. Where the previous transfers are from profit and loss appropriation account or post-tax profits, such credit to the profit loss appropriation account or profit and loss account will not create any further liability. Moreover, the bank will create corresponding provision on debit side of the profit loss account. It may increase further this provision concerning the NP position as on 2025 March ending. So there will be debit equivalent to BDDR 2024 or more than that, and credit to profit loss appropriation to the extent of BDDR 2024. If certain banks have taken deduction for the transfers from profit and loss appropriation to BDDR reserve, then this reversal amount is liable for taxation. Another question arises that after excluding this transfer, what is the profit of bank for the financial year 2025? In my opinion, it should be more than the BDDR 2024, so that the taxing authority cannot interpret it that the bad and doubtful reserve created this year to the extent BDDR 2024 is not out of business income or current year income, but it is from previous year income. Another point is where other reserves are transferred, which are post-tax reserves, then these reserves should be considered accordingly. By this way, after passing all these entries, the provision for NPA means balance in bad and doubtful debt reserve as on 31st March 2025 will be permitted to be netted at from the gross NPAs to arrive at net NPAs. If this is done or this treatment is given, then this amount will not be reckoned as a part of Tier 1 capital. So bank has to see by this disclosure whether their gross NPA and net NPA disclosures are affected or not. Thus, after passing all these entries, henceforth the balance in bad and doubtful debt reserve will be treated as provision for NPAs, and further write-offs shall be accounted towards this bad and doubtful reserve balance or say provisions. This way, the banking industry will follow accounting standard 5 uniformly in the coming years. This will be very much task for the bank to adopt for this new format as per circular of 20th March 2025, 25, number RBI 2024-25, serial number 126, dated 20th March 2025. And now, the financial statements of cooperative banks and all other banks will be uniformly prepared and presented, and the disclosure shall be made accordingly. And this will be benefit to the public, investors, and financial analysts to evaluate and study the financials of the banks. These are my views and comments on this circular. Read with section 56 with 29 format 56 ZL is now refilled and the new format is implemented by circular number 126 of 20th March 2025 with effect from financial year 2025. I hope that the banks will enter into new era of transparent and uniform presentation of financial statements and disclosures and notes to accounts. I am thankful to you for viewing this video. I request you to share your comments and suggestions so that any further discussion or clarification regarding this accounting treatment in various scenarios of various types of banks can be examined. It is likely that the banks having losses may face certain problems regarding the deduction of bad and doubtful debt reserve section 36(6)(a) of Income Tax Act. But to my mind, every bank should examine draft a presentation giving effect of all these entries and compare the disclosure of gross NPA, net NPA, as well as Tier 1 capital leading to changes in CRAR. With this conclusion and closing comments, I thank you all for patiently hearing my views and comments. Thank you.